Welcome back to Primary Source China Investment. Peng.guo and I are here for another show. This week, after talking about all of the problems that the US listed Chinese companies have, we wanted to focus on the A shares, the stocks traded in Shanghai, Shenzhen, the large cap stocks, because those are the ones that you're going to be seeing in a number of the ETFs that are traded in the US. A lot of investors, quite frankly, don't know what those A shares are. What are the names in that portfolio? What does that large market index look like? And today we're focusing on the CSI 300. And the CSI 300 is the 300 largest companies traded in Shanghai and Shenzhen. And those 300 companies are measured by free float market cap. In Shanghai and Shenzhen, there are more than 7,000 companies. So it's a huge market, a lot of names. And these 300 represent the 300 largest. If we look at from top down, where do these companies come from? So about 61% of them are listed in Shanghai, and the remaining 39% are listed in Shenzhen. In terms of sector breakdown, 15 years ago, 10 years ago, the largest names on the mainland were all financial services, and that's still true, but a much smaller percentage. So the index has become more diversified. So you have financials at 23%, industrials at 20%, consumer staples at 14%, infotech almost at 10% now, healthcare at 9%, materials, consumer discretions, utilities, real estate, communication, and on and on and on. What's important about this is this index is now quote unquote diversified, which means you have exposure to a number of different industries. And before we get into some of those names, I'd like to turn it over to Peng.guo, get his perspective on this index.
So firstly, China has two exchanges, Shanghai and Shenzhen. And so traditionally, Shanghai exchange mostly included the large companies, like the state-owned, especially state-owned companies. So they're all big names. And the Shenzhen is more like for the private companies. So a lot of the private owned companies, as well as the high-tech, innovative, and the small cap related companies in Shenzhen. But a lot of things get changed. So Shenzhen, due to the high-tech growth in this area, and a lot of companies grow to the large cap. Traditionally, they look at the composite index. But the composite index does not really reflect the true market situation. So right now it's more like the CSI 300 as well as the Zhoujen 500 indices. One is representing the large cap, another one representing the small cap.
Yeah, just to be clear, so people understand, the CSI 300 is the top 300. The 500 is not the top 500; it's the next 500.
That's exactly right. Yeah.
Yeah, people confuse that. Yeah.
Okay, so that's those two indices is especially important in China market because they have the related future. So people can use those kind of future to hedge it, which is to reduce the cost or risk during the downside risk. So that means they are more active and the liquidity is much higher, and obviously they get a better valuation compared to other indices. Especially in the downside market. So probably people can see due to the future hedging, as well as like a lot of the institution own such kind of the indices, which is more stable and have a low volatility compared to the individual company or sectors.
Right, that's a good point. The CSI 300 and 500 both have futures contracts, so they can be hedged. Let's turn to look at some of these. We'll get to the top 10 names. And what's interesting is, we've joked in the past that the Maotai Guizhou Maotai is still the largest held stock in China. Those of you know, it's a Baijiu company. It's this white liquor, and it's been famous in China for a long time, still remains famous in terms of market cap. It's the largest market cap company. The second company is something that people may not be familiar with, which is CATL. And CATL is the large battery maker in China. This is globally the largest battery maker. Number 3 is China Merchants Bank. This is the largest consumer bank. It's the largest private bank in China. When I mean private, it's a private wealth management. So massive bank. Most of our listeners may be familiar with ICBC. ICBC is the largest bank. It's in the top 10. It's the largest bank by assets. Rounding out the top 4 is Ping An Insurance, the largest insurer. It also has a large wealth management business. It employs 362,000 people. If you look at just these top 4, this represents 15% of the CSI 300. And the sector allocation aligns with the overall sector allocation. China Merchants and Ping An are financials. CATL is an industrial battery maker, and Maotai is rightly capitalized as a consumer staple, not a discretionary. I just wanted to get to the remaining 6 in the top 10 because it's interesting as well. Wuliangye is another Baijiu company. I mentioned ICBC. Longyi, this is green energy. It's the largest provider of solar infrastructure. Midea is the largest appliance manufacturer in the world. China Yangtze Power is the parent company of the Three Gorges project. Readers may be familiar. And then East Money is a financial information powerhouse. So if you look at these companies, you do have good diversification. You have large companies that actually are very profitable.
That's exactly right. So if you see those top 10, and if you composite them together, you will see their return and the risk characteristics is totally from the China listed companies in the US market. That's really reflects the China's current situation. So traditionally, consumer sectors, financial sectors, plus some of the high-tech growth area. So that is China's current situation. Generally speaking, those China listed companies, public listed companies, have a better quality and better control than private company in China market.
Right. The focus on these large cap names on the mainland is for a couple of reasons right now. Why are we talking about this right now? So as we've been saying all along, investment in equities in China is, policy first, top down. And that means we have to look at what's happening in Beijing in terms of policy. And, we have a number of real observations. We have COVID lockdowns. That's absolutely going to slow growth. But we also have stimulus happening right now. PBOC injected 10 billion in reverse repos this week. And there's been discussion that State Council is going to cut reserve ratio for banks. And we have CSRC discussing stock buybacks. So that's all on the domestic side. On the foreign side, this week, another 12 companies listed in the US were notified under HFCCA that their corporate audit documents do not meet SEC standards. So if you look at these companies that are listed on the mainland, those companies don't have those kind of international risks. There's never going to be those kind of US, China, listing, headline risk, policy risk, regulatory risk. Those kind of risks don't exist for these companies.
That's a great point. Yeah, I never thought of that. You're absolutely right. Those companies have any bigger international exposures. They really grow from the China domestic market and take the big share of the domestic market. Yeah, so and in the reality is that those big companies is really taking a lot of the profit of the sectors. Maybe 20 companies take the 80% of the profit in the entire sector. So that's why the money and the capitals really concentrate in the top companies.
I was just pulling up a chart for ASHR to see what's happened year to date, and it hasn't been great. There's no doubt about it. The market's been down. I think it's around 15% year to date, and that's not great. But the reality is things are changing. So you constantly have to look at where are we going forward from here. And one of the things that I was looking at earlier in the week was the Stock Connect. And we did a show a couple of weeks ago about money coming out of China, foreigners pulling their money out of the fixed income market. And we said there's a couple of reasons for that. One is that rates in US dollar have crept up and rates in renminbi have crept down. But what was not covered was the amount of money that's been going into A shares via Stock Connect in Hong Kong. And those who are not familiar, that's a way to buy into Shanghai and Shenzhen stocks from Hong Kong. And you see those volumes have been increasing over the last month.
Yeah, that is another very important thing. So it's really regarding the capital inflow and outflow. Stock connection, that is a major channel to invest in China. Really, you can invest whatever you want through the legal channel to do it. That's also because the China created another bigger indicator. Every day they calculate how much money flow in and flow out into the each stock exchange. And then a lot of the individual investors and follow those money flow to buy and sell to do it. Generally speaking, this connected exchange just provide the great opportunities for the portfolio construction. So you have a better investment universe and you have more flexibilities to construct and design the better portfolio rather than just a cap weighted portfolio.
Right, and we want to stress again, China's never a set it and forget it market. We're looking at what's happening now. That's why people are tuning into us, because what is going on in the market now? How should investors and allocators position their portfolio? And what we've been saying is, hey, the US listed Chinese names definitely have more downside risk than upside risk. And the A share market has more upside risk than downside risk.
I think, yeah, it's really depend on the position. I think right now, the entire Asia market, as well as in the Hong Kong stock market, is in the relatively low area. Mm-hmm. So it's still get a volatility and the bump it at the bottom, but from the valuation perspective, it's probably worse to think about it to do it.
Yeah, the headlines coming out of China are not great. I mean, we're talking about lockdowns that are still, we have distribution problems, we have food insecurity. There's a lot of bad news, but is all of that bad news out? And sometimes you have to look forward. You can't just look at what's been happening over the past few weeks or months. So that's why we're here. This week, we're going to leave it with C3. Thanks for tuning in. Make sure you subscribe and hit us with any messages.
Thank you.